I'll make a big statement. I believe this year in 2024, which by the way is the first year of this epic, the blockchain era, the truth net, as I call it, I believe more money will be converted from fiat to Bitcoin than the previous 15 years of Bitcoin's existence.
Today, I sit down with Mark Yusko, founder of Morgan Creek Capital Management.
And it's because the demand isn't going away.
To talk the potential of Bitcoin in 2024.
People forget this, right? We went from 10,000 to 60,000 in about 4 months.
Also, what could go wrong? Is everybody too bullish? There's a saying, if everybody's thinking the same thing, then somebody's not thinking. Is everybody too bullish? When to take profits? Best time to sell? What is your profit-taking strategy? And even if it's not with Bitcoin, what is your strategy for taking profits with altcoins?
Okay.
And of course, watch today's whole video. We talk Ethereum price prediction by end of year. Based on your Bitcoin forecast at the end of 2024 or cycle top, where does that put Ethereum? Click the like button and let's start. Now, something that was super prevalent narrative-wise at the beginning of the year, several weeks ago, was the Bitcoin ETFs and their impact on the market.
Yep.
We're several weeks into it. What is the current impact of the Bitcoin ETFs in supply and price?
So, couple things. One, it's interesting to watch the arc of the story go from this will never happen, right? So, last June, BlackRock applies and was like, no, it'll never happen. I'm like, are you joking? BlackRock just told you it's going to happen. And so then it was like, well, when it's going to happen? Well, it's probably going to happen in that January window. I really thought it was going to happen on the King's birthday, but they waited till the 11th. So the 8th is, the King's birthday. But bottom line is, everybody's like, oh no, it's a buy the rumor, sell the news. And the buy the rumor part worked, right? We went from kind of 40,000, 38,000, pumped all the way to 48,000. And look, there was some shenanigans, shall we say, going on. There's this guy, I think it's like CC15. I should give him better credit on Twitter. He was tracking these wallets that were just every day buying. And it was like, wait, the ETF hasn't been approved. Who is that? And I would argue, no knowledge, but I would argue that was probably an account associated with or affiliated with or friendly with BlackRock, Fidelity, somebody who was accumulating, because they all believed, as I do, that this is a monster development, like way bigger than people think. And the issue is we just shifted the aggregate demand curve, right? So when you have supply curve, demand curve, and you shift the aggregate demand curve, the price goes up. So fundamentally, the price is going to go up. And they're like, no. Look, right after they went down, I'm like, okay. So what you saw was in the short run, there was liquidations from GBTC. They were kind of offsetting the early flows. You had a bunch of the big dogs like Vanguard and UBS and Bank of America that said, no, you clients can't buy this. Really? You're going to tell me I can't spend my money on something that I want to buy? Buy Vanguard. Like literally people should, and they did leave. Now, the flip side of that is someone has to be that, staid, stodgy institution for the old folks to hold their stuff and not go after these Ponzi schemes, whatever. So not all of the capital that was captive is going to rush into ETFs all at once. So that was first. Second, some other shenanigans, very little discussed thing, Austin, was the same day, January 11th, there was a new set of futures released on the Chicago Mercantile Exchange. Nobody was talking about it. And if you go back at the previous two, December 17th, 2017 and November 6th, 2021, those were tops, right? Where the future allowed the big organizations to get short and push the price down. Well, that certainly happened in that first week. So you had GBTC liquidations, you had the FTX liquidation, you had the shorts coming in. And yeah, we went from 48 down to 38 and just retraced that whole period. And like, see, told you, total failure. Well, last time I checked, right before we got on air, it was 52 again. And that's a big move. Well, what happened? The demand curve shifted out. The demand, the amount of new demand for Bitcoin from my brethren and sisterin, right? I'm a boomer, and all the other boomers out there, they're not going to get a ledger and buy it direct. They're not, right? Most of them. What are they going to do? Some will open a Coinbase account, like my dad. He has a Coinbase account. He doesn't own Bitcoin then. You tell my dad he doesn't own Bitcoin. Fine. But a bunch of them are going to say, hey, buy me some of that IBIT. BlackRock's, advertising this IBIT thing. Buy me some of that. And so that's going to happen. So you and I talked about this last time we were together. You said, well, what's your view of Bitcoin? I said, well, look, we're in crypto summer. And crypto summer is a period where we're going to drift slowly, series of higher highs and higher lows. So not without volatility. We're going to drift slowly toward fair value. Well, why is that? Well, after crypto winter, okay, and you bottom, you get crypto spring, where you just kind of bounce around the bottom and it's kind of yuck and not a lot happens. Well, then crypto summer happens where the investors come back, right? They've gotten over losing money and they come back and they're like, hey, wait, if the fair value is 52K, and I was rounding and said it's 50, but according to Tim Peterson's Metcalfe's law model, the fair value is 52. So we were at, in the 30s, we're going to drift toward that 52 number by the halving. But the caveat I said is if, and I might have said when, they crown the king, that BlackRock was going to get crowned. Now, I didn't think they'd do all 9. I actually didn't. But that's even better because that's more demand. And so as we've come closer to fair value, now we've totally completed that segment of the move. Well, now we focus on the next thing, which is the aggregate supply shift. So the halving, now it's scheduled for like April 8th. Originally it was early May, and then it was, for a few days it was 420 and everybody was freaking out. And now it looks like it's the 8th, which I think is ironic in that that's the solar eclipse date. So I think that's kind of a wild coincidence. Not planned, I don't think. But anyway, so when we have the fair value doubles. Well, no, that's not how it works. I'm like, well, no, that's exactly how it works. Because if you cut the block rewards in half of the miners would go out of business because their costs are fixed. So the price in historical halvings has doubled. Not immediately, but over time. Now, I don't know if we talked about this or not, but I've kind of changed my thinking on that because of ordinals, because of inscriptions, and because of transaction fees, maybe we don't double this time. Maybe we only go up 50% because we don't have to have all of the money come from block rewards. So let's say we get to 75 as fair value. And again, the model will tell us what that fair value is, but let's call it 75. Then what happens is we'll get to crypto fall, which is the June period post the halving. That's when the craziness starts to happen. That's when the FOMO happens. Then we get into Thanksgiving and everybody goes home and everybody's patting them on the back and come on in, you get 2 turkey legs this year. Whereas 2 years ago, you're not invited anymore. You're disinvited if you're a crypto person. So now we're going to get that FOMO top. And in the past, that's gone to 2.3 times fair value. So when fair value was 30,000 in the last cycle, we got to 68, 69. This time, let's say we only get 2 times because there's not as much leverage this time because they cracked down on Binance and others. So let's say we get 2 times, that would be 150. I think that's baked in the cake. So anyway, that's a long answer to your simple question.
That's exactly
why are ETFs important? They're important. They're really important. And it's because the demand isn't going away. That demand, I'll make a big statement. I've said this a couple times on Twitter. I believe this year in 2024, which by the way is the first year of this epic, the blockchain era, the truth net, as I call it, I believe more money will be converted from fiat to Bitcoin than the previous 15 years of Bitcoin's existence. I think upwards of $300 billion is going to get converted into Bitcoin this year. Big number.
In crypto, we have these cycles. Do you think that this could be the last great Bitcoin bull run or cycle? Because after BlackRock and Fidelity, they're the biggest. Who's left?
Well, again, it's a great question, but no, because humans are going to human, right? Humans are going to push this thing well beyond fair value. And then investors are going to come in and say, okay, it's time to get short. And they're going to collapse it. And it might be governments or banks that manipulate like they did with the futures and, back in 17 and 21, who knows? But the bottom line is the reason we have this 4-year cycle in crypto, it's driven by the code in Bitcoin. And the code is not going to change. Every 4 years, we're going to have a halving, which means every 4 years, there's going to be this upward pressure on price to reward the miners. That's going to draw in the speculators and ultimately the gamblers who FOMO in at the top. And then we're going to crash. And those crashes will always be worse than fair value, right? When you crash, you don't go to fair value, you go through fair value because people panic and shorts get liquidated. I'm sorry, longs get liquidated, leveraged longs get liquidated, not the shorts. The shorts make money. So I do think you're right that this cycle is exacerbated by the entrance of new ways to get demand. But that's been true of every cycle, right? The first cycle, when it was a science project, suddenly you could buy it not in the back alley, literally where you had to meet somebody and you had to worry about getting hit in the back of the head with a wrench, to you could do it at Mount Gox, right? And then that failed. And then you could do it at Coinbase or Kraken. And that not failed, but then that got dicey. And then you had this thing, GBTC. So the last cycle, people forget this, right? We went from 10,000 to 60,000 in about 4 months because GBTC got $10 billion of demand into their trust. That was what drove that cycle. Now also, you had some Michael Saylor buying, and you had a few others, and you had Elon's famous quote where we're not going to take it for Tesla, and it crashed. Remember, it went from February down to June, down 50% before it rallied into November when he's like, oh, I'm kidding, you can go back and buy it. So there was plenty of demand. And what's going to happen every cycle is there's going to be a new avenue for demand. So this cycle isn't the trust, GBTC, it's the ETFs. And the next cycle, maybe it'll be derivative products, or maybe it'll be the institutionalization or the Wall Streetization.
Or small countries.
And then it'll be small countries. Then one of these cycles, it's going to be central banks, right? Literally, central banks are going to say, I got all this gold and it's expensive to store and it's kind of cumbersome. I could put a lot of Bitcoin right on this little phone and just put it in the vault. And I think central banks will start to buy. And then you're going to have, someone's going to come up with, well, I've been talking about this for a while, that if you think about the internet was invented in 1991. Tim Berners-Lee wrote the first web page and boom, we have the internet. But it took 5 years for it to become kind of well-known and usable because we didn't have the browser. So Mark Andreessen invents Mosaic, and then Microsoft steals the idea, which they always do, and they, introduce Explorer, and boom, the internet's a thing. And then the mobile net, mobile telephony wasn't invented in 2007, but this thing was released in 2007. And all the companies were like, oh, that's stupid. $500 for a phone? I'm never paying $500 for a phone. They'll have zero market share. In fact, I watched the video of the Nortel guy basically saying, no way they compete with us. Anyone have a Nortel phone? I mean, no, nobody, literally, or Motorola even. So, what happened was the iPhone was the next window, the next portal into the mobile net. So we had the internet, the mobile net. Now the truth net, I will argue, is going to be a hardware security module, right? Whether it's a ledger or an Elipad, or maybe it's one that hasn't been invented yet, or whether, they finally figure out how to make the enclave work in the phone. I don't know. It doesn't really matter to me, but someone's going to invent that. And that's going to onboard an entirely new generation of users. And so the numbers are kind of crazy when you think about it. Bitcoiners, we all know each other and we all talk to each other and we all tell each other how smart we are and yay us. Infinitesimal number relative to humanity. And there's a whole bunch of people that 10 years from now, 20 years from now, this is going to be so commonplace and so ordinary. You and I won't be able to talk about this because it won't be interesting anymore. It'll just be like, I don't talk about how this actually works. I don't talk about the CDMA and the TDMA. There was a time 15 years ago, that's all we talked about. Was the CDMA going to win or TDMA going to win? And, is this chip going to win or that chip going to win? Is 286 or 386 or the Pentium? Once it becomes invisible, then it'll really start to grow. And if you believe, as I think I do, and you do, and others that have seen the light, that this is a technological evolution that is never going backwards, right? It's just going to keep evolving and keep transforming and keep enveloping the broader world until, and I use this prop all the time, that, my granddaughter, who's 1, will never have one of these. She will never have a leather wallet. She will never use paper money, ever. In her life, she will never use paper money. Right? She will only use digital money. And people are like, that'll never happen. Yeah, it will. And it'll seem normal 20 years from now, but it doesn't seem normal now. So
if, like, to you and me, it's so obvious, and I'm just talking about Bitcoin this year, crypto this year.
Yeah. Yep.
But there's a saying, if everybody's thinking the same thing, then somebody's not thinking. Is everybody too bullish, or what's the counter narrative?
Again, great question. And I say this all the time. The reason I like, talking to you and doing your show is you ask great questions. You prepare, you send me the questions in advance. There's actually a lot of thought, and I can answer any question. Now, many times people say, God, he's so full of shit. I'm like, okay, fine. But I like to answer questions, but the more important skill in life is to be able to formulate great questions. And I literally tweeted that question out the other day.
That's where I got this question from in my prep.
Okay, there you go. So yeah, great minds think alike. And look, when everyone is leaning the same direction, there's not a lot of thinking. And that's what I feel about passive versus active investing. Everybody's convinced that passive is the best, and they don't think about what it does to, I mean, super micro SMCI. Everybody's like, oh, look at how great this is. Like, are you joking? They make rack servers. Okay. And, oh, but they buy NVIDIA chips. Oh, yay. Okay, fine. But you still shouldn't pay 10, 15, 20 times revenues for that. But because it's capitalization weighted and it's in an index, the higher it goes up, the more that index has to buy. So the higher it goes up, so the more, and it's a self-fulfilling prophecy. And so in that regard, I think we're in a massive bubble in traditional assets because no one's thinking. It's all machines. They're not allowed to think. They're dumb. And I don't mean unintelligent. I mean rule-based, meaning they must buy things as they become expensive, which is the antithesis of value investing, actually. But it's a momentum strategy, and momentum works until it doesn't, and then explodes spectacularly. People should go back and look at, MicroStrategy in 2000. It went from $1 to $330. It looks just like SMCI. And then it went down 99% because the shorts were right. Now, the shorts got carried out multiple times, just like the shorts now. In fact, I think SMCI set the record for the highest relative strength. It just beat GameStop, which just means it's a short squeeze. So the point there is, in crypto, yes, all of us watching this show and together in the crypto Twitter, we're all thinking the same way. We're just a tiny little fraction, right? All the haters are still hating, right? Jamie Dimon, Elizabeth Warren, Gary Gensler. I mean, the guy has been beaten about the head and shoulders all year, lost case after case. Just give in, Gary, right? Just give in. He won't. He just keeps leading with his chin, and he keeps getting beat up. So the haters are still going to hate. And Vanguard, Merrill Lynch, UBS have all said, nope, we don't recognize this as a real asset. This is not like stocks, bonds, and cash. No, it's not. It's actually better, right? That's why you need it in your portfolio, because it increases the Sharpe ratio of a diversified portfolio. So I am cognizant that even if it's just a small group, if literally everybody is thinking the same way, bad things can happen. But the difference now is there's so little external interest, searches for Bitcoin, not very high. People coming to you or me that we haven't talked to for a year saying, hey, how do I buy Bitcoin again? That's not really happening yet. It's starting on the edges, but you look at the greed fear index, we're not really in crazy greed yet. Now, Bitcoin yesterday was really overbought. We had a shooting star pattern, which short term is not very good. So I'm nervous short term. And there's one more test coming mid-March to early April. There will be a selling wave where everybody realizes how much they owe Uncle Sam in taxes. And kind of the other thing we didn't talk about was part of the sell pressure around the ETF launch was Lunar New Year. And this happens every single year, right before Lunar New Year. The Chinese need to sell some to fill up their red envelopes with cash. That's what they do. And that's their tradition. And every year there's a selling wave right before that. And then we bounce up. And then there's the selling wave going into tax season. And then we bounce up and we have a good summer, and good fall. But I think this selling wave could be big, right? Not only were profits huge last year. Okay, so there's a lot of people that owe some taxes because there was a lot of trading. It's now the fifth question on the 1040 form. Like literally, what's your name? What's your address? What's your security number? I don't remember the fourth question, maybe your birthday. And do you own crypto? Like, really? Really? I mean, okay. So they can protest that, oh, we don't care about crypto. We hate crypto. But if you own it, we want to tax you on it. Well, that's actually the definition of money, right? Definition of money is something you can pay your taxes with. Now, they won't let us pay our taxes with yet, but the fact that they want us to pay taxes on those gains is clear legitimization of the asset.
In 2021, besides Bitcoin, obviously play to earn, NFTs, huge trends in crypto in general. Yep. Like, what are you seeing as trends for this cycle? For example, L1s, L2s, real world assets. What are you seeing?
Yeah. So look, L1s are back, clearly. I mean, I got in a lot of trouble when we did the show last summer, when I said, Solana vaporized transactions, and everybody freaked. I mean, they were like mad at me. They're like, and they're like, we never rolled back the blockchain. I thought, I didn't say you rolled back the blockchain. I just said, look, people sent transactions, the network went down, those transactions vanished. Maybe would have been a better word than vaporized, but okay. And it was funny. Most people were just like, you're an idiot, we hate you. But there's one guy from the Netherlands DM'd me and said, hey, I want to show you that we fixed this stuff. And so we had a very nice session and we went through it. And what's his handle? Something pirate, happy pirate, something like that. And he even gave me Mark Yusko.sol he bought for me, and showed me how to send USDC for nothing. Like, okay, so that's all great, but we still have this prop. And so I jokingly said, if you go back to that date, which was September 9th, when I changed my mind, we've been straight up since, right? Went from $10 to $110. So I'm taking full credit. Ha ha ha. Now, I have this other guy who's tweeting at me every day saying, it's all scam market. They're pumping the numbers up, and there's a bunch of market makers, and the network went down again. Yeah, the network went down again. So I'm still not 100% convinced. So come at me, Solana guys. I'm not 100% convinced that you fix everything. And I do worry that if one person can turn off the network temporarily, that's not really decentralized, is it? I mean, that's a concern. Now, it doesn't mean I hate it, and it doesn't mean, I haven't sold the rest. I told people very bluntly, it was our best investment ever, and we sold most of it, but we still owned about 20%. Haven't sold that. Just like Coinbase, we didn't sell all of it, and I'm really happy because today they busted earnings wide open. So I think L1s. So that's to answer your question. L1s for sure. Now, I say that because I like what they're doing at Avalanche, and I love John Woo. He's a buddy, and I think Gun's a genius, and I like that, and I think there's some interesting things going on at Cosmos, and I think there's some but I still struggle. Again, we've talked about this with the mental models, right? If we're just going to replicate the internet where there are 5 protocols and it's a stack, Bitcoin is the base layer like TCP/IP, and Filecoin like FTP, and Ethereum like www. I struggle with what's SMTP and what's HTTP. I don't know, Polkadot, Cosmos, Solana. I don't know. That one, so it kind of works, kind of doesn't. If it's the Lord of the Rings, one chain to rule all chains, it's all Bitcoin, everything else doesn't matter. It has to be proof of work. And then there's Lightning and L3s and L4s, which don't exist yet. So hurry up and create them. Maybe. Then there's the lots of L1s and bridging. And everybody's like, oh, see, Mark, you're making the case for Chainlink. Okay. I mean, not intentionally, but okay. If you tell me Chainlink is robust and doesn't have attack surfaces, and I mean, price is going up, but I worry that those attack vectors are not robust enough yet to make that world work. A multi-L1 world seems logical to me. Now, I can still make the case that if I have a really valuable asset, I'm putting it on Bitcoin. Right? If I have a really valuable digital asset, I want it on the safest, most secure, most robust chain, and proof of work, to me personally, is the only one that works for that. But not everyone has to agree with that. So then the second thing is real world assets, tokenizing real world assets. Absolutely. And how hilarious and I tweeted this out, but and I don't really believe he did this. I don't think he actually saw my video, but Larry Fink has been on TV multiple times now talking about, every stock, every bond, every currency, every commodity, it's all gonna be tokenized. I'm like, here's my video where I said those exact words. So, imitation is the sincerest form of flattery. Now, most powerful man in asset management, give a shit about me. So I'm not saying he copied me, but I've been saying that for a long time. I've been saying that since 2017. And I believe it. Now, there have been lots of reasons why it hasn't happened yet. And we still have lots of problems. Like if I take a piece of land and I quote unquote put it on the blockchain, the land is still where I left it. And I still have to have somebody observe it, or maybe I have to put sensors around it to make sure that it didn't get flooded, or if there was a building on it, that the building didn't fall down. But in terms of solid provenance and ownership and title, blockchain's way better than the database. Contrary to Gary, like it's no different than an Oracle database. Bitcoin, no different. Are you freaking kidding me, Gary? Really? You want to make the case that an Oracle database is as secure as a decentralized proof of work blockchain? Even proof of stake is better than Oracle database. Maybe not very much different, but come on. Anyway.
You mentioned this before, but your Bitcoin forecast for this year is double fair value after the halving, which fair value is 50. Maybe you only get 50% of that. So that would be at least 75, 80, and then a blow off top in crypto winter. For that, if that's accurate.
Well, crypto fall before crypto winter.
Crypto fall.
Yeah.
What is your profit taking strategy? And even if it's not with Bitcoin, what is your strategy for taking profits with altcoins?
Okay. Oh, I'm glad you added that last word, with altcoins. So here's the thing. I'm a venture capitalist. That's my day job. And so in our funds, we own assets, mostly equity, but 30% liquid protocols. And we buy them and we hold them. We don't trade them. And there are people that do that really well, but that's not us. Now, those funds have a finite life. So my first fund, raised in 2018, is coming up on the end of its life. So in this cycle, we will likely take profits, as we get towards crypto winter, June of 25, sometime between January and June of 25. So in our second fund, where we've got a little longer, we probably won't. In our third fund, where we're just starting, we definitely won't. And our fourth fund, which we're raising, clearly we haven't even bought anything yet. So that's how I think about it from that standpoint. Now, from a trading perspective, I think right now you don't need to really trade because we're here about to go here. So I just want to keep accumulating and be long. And do I believe that, Bitcoin will move X, Ethereum probably moves 1.3X, 1.4X. The others move 1.5 to 1.8X to 2X. And some of the alts are going to move 10, 20. The problem, as you get further down the stack, the upside potential is higher, but the downside potential is you lose everything. Like literally, if you think about what most utility tokens are, they are gambling vehicles. And that's not necessarily a negative. I mean, they are what they are because you don't own equity, you don't own debt, you don't own share cash flows. They are literally just given value because other people buy them. Take the Doge coins or the Pepe coins. There is no utility at this point. Now, if Elon makes Doge a payment rail, okay, but he hasn't done that yet. So in those cases, the problem is they're like pre-seed stage venture. The upside potential is huge, right? If you invest in something at fractions of a penny and it goes to $1, you've made a lot of money, okay? But 97, 98, 99% of pre-seed stage venture capital deals go to zero. Even if they get big market caps in the short term, they just never catch on and they go to zero. So I bet if you look back in history, the very vast majority of these, projects, there's a whole bunch of them that go to zero, and that's fine. As long as you don't rifle shoot. If you rifle shoot and you put all your wealth in a single altcoin, that seems like a bad strategy to me. Now, if you're right, and that's one that goes up and not down, you get rich. And, Gary Cardano and I talked, and he was talking about this, and he said, somebody came back at him and said, no, you're talking about being concentrated. We need to be diversified. I'm like, well, look, all great wealth comes from concentration. Every great fortune came from a concentrated position in stock, in a business, in real estate, in a commodity, whatever. The problem is you don't hear about the losers, right? You don't hear about the 99 companies that started in a garage that aren't Apple. But there were 99 other companies and they went to zero, but Apple became gigantic. And so history is written by the winners. And so if the caveat is you have to be concentrated and right. Because if you're concentrated and wrong, you lose all your money, you get poor. So concentrated portfolios make you rich. Diversified portfolios keep you rich. Now, for the first part of my career, first 30 years of my career, I was in the stay rich business. Not that I was rich, but my clients and my employers were rich. And so my job was to keep them rich through diversification. Now, my view of diversification is a whole bunch of it widely diversified, stay rich, but I'm always going to have this bucket of investing in innovation. That's my pinned tweet. And that's where we've made the most money and how we outperformed other stay rich buckets because we had this little get rich bucket that did okay because we invested in Sequoia and Kleiner and, Peter Thiel and et cetera. So I would say if you're thinking about investing in alts, one, scattershot, have a bunch of them, ride the winners. And then the question about, well, what do you do? There is going to be another cycle. There will be another crypto winter, as sure as we're going to have an eclipse on April 8th. There's no way to stop it, right? It's going to go dark. Actually, this freaked me out a little bit. So there was an eclipse in 2017, and the path went over 9 towns called, oh crap, now I'm gonna forget. Hold on. I got to get this right. This is crazy.
I need to know. I need to know.
No, this is crazy stuff. What did I do with it?
If somebody knows down in the comment section, please comment. Help us.
Well, it's I know the current one is we're going to go over 7 towns named Salem, which is short for Jerusalem, right? And all right, here it is. So in 2017, give me the name of the town.
No rush. Take your time. We need this answer.
I thought it would be easier to find.
All right, I'm going on the internet. I'm going to find it before you.
All right. Anyway, so it's the eclipse path in 2017 went down the country like this, and it went over 9 towns with the same name. It's like, how is that even possible that someone could know, hundreds of years ago what the path of the eclipse was going to be? That's crazy. But then this time it goes over 7 towns with the same name. And I guess if you used, there are a lot of towns, so you could probably, figures lie and liars figure, but I just thought it was interesting. So I don't think that it's, well, I don't remember where I was going with that, but anyway, so.
You're saying when to take profits. That's
when to take profits. So Um, we're going to have a winter. As sure as the sun is going to blot out, from the sky when the moon goes across it, and they can't stop it, there's going to be another winter. So if I were trading, which I'm not a trader, I'm an investor, so I buy and I hold, and I'll weather the storms. But if I were a trader, I would ride through, mid-year 25. I think the supply-demand imbalances are going to be really robust. I think the technology that gets adopted, and this is where they're in the alt space. There are a couple ways to approach it. So one is scattershot the things that are moving and just, let them run, sell the losers fast. Because if you think about the great investors of all time or the great traders of all time, like Paul Tudor Jones, there's a picture of him in his dorm room at UVA, and he has this sign above his desk: losers average losers. And in trading, that's absolutely true. In investing, it's not 100% true, but in trading, never ever chase a loser. Just sell. Just move on to the next idea. But the corollary to that is winners press winners. The hardest thing to do in trading is to press your winners. And I was very lucky in my life and my career. I've had a lot of great mentors, and one was Julian Robertson, maybe one of the greatest investors of all time. And I've talked to lots of people that work for Julian, and they all said the same thing. Three things. One, most person of the highest integrity they've ever met, like literally just never fudged the numbers. Two, most competitive person they've ever met. I mean, just wants to win. There's the question, do you like to win or do you hate to lose? You love to win, hate to lose, and it matters which one you pick. He liked to win. And the third is they said he had an uncanny ability to double up. So he would press his winners. And then at some point, he would certainly take profits. And I think for me, I'm more of there's a guy I follow on Twitter, and we're Twitter friends, which I have a lot of friends from Twitter over the years, Larry Tentarelli. And Larry, he's not an investor by training. I mean, he had a different career, but he became a trader, and he's all about technicals and momentum. But he's religious about it and disciplined about it. And one of the things that I love, he says, is nothing good happens below the 200-day moving average, right? And the trend will continue in the direction of where you are relative to the 200-day. So, look at NVIDIA right now, right? Everybody's wishing something bad would happen. Well, it's way above the 200-day. The trend is your friend, and don't try to go against it. He says there will come a day where the 20-day crosses the 50 and you'll get a sell signal. And then the 50 will cross the 200 and you should be out. And so there are disciplined ways to just say, you know what, I'm wrong. Everyone else is right. And I'm just going to move to the sideline. But again, that's a long-winded way of saying I'd probably go with the momentum, go with the trend, ride the wave. But when things go against you, right, and just watch technicals. When the technicals turn, and particularly that 5,200, like the 2050, that's more of a short-term trading, but the 5,200, when you get a death cross, is not a perfect predictor, but why? Why fight that? If it goes back up, then buy it again. You can always buy it back.
Mark, two final questions. This first one is about macro. When the Federal Reserve inevitably cuts rates, what will that look like? Will it be because they're about to break the economy? Will the housing market crash? Will things be good because rates are lower? What do you think?
Again, really good question, really important question. The Fed, with respect to rates, is reactive, right? They're not proactive. So they react to the economy, both positively and negatively. So when the economy's ripping and inflation's starting to turn up and growth is high, they'll start to rein back in the liquidity. They'll raise rates and try to slow down the car so it doesn't careen off the edge. And inevitably, that's when they break things because they go too far, right? Because they are reactive. And because they drive in the rearview mirror. And so when you're driving in the rearview mirror and the road turns, you go off the edge of the cliff. So the same thing is true on cutting, is they'll wait too long. The economy will have already slowed. I mean, there are a lot of indicators that say things have slowed. I mean, Japan's in technical recession, Europe's in technical recession. Now we're in this great expansion. Well, kinda. I mean, we spent $1 trillion in deficit to get 300 billion in growth in the fourth quarter. That seems like a bad trade, right? I should at least get 1-to-1. If I spend $1 trillion, I should get $1 trillion. But there's slippage now because we're so highly levered and there's a lot of interest costs. So I think this cut in rates will be like all previous cuts in rates. It'll be because they perceive that things are getting worse, not better. You don't cut rates when you think things are good. In fact, I say this all the time. If you look around the world, high rates are a sign of economic strength. Low rates are a sign of economic weakness, right? If you go back to the global financial crisis, what did everybody do to rates? They cut them to zero or even negative. So if you have negative interest rates, you are not confident about the future, right? If you're trying to force people to buy instead of save their money because you're penalizing them for putting it in the bank, you're trying to propel the economy out of the doldrums. Conversely, if rates are high, like in India, you look over the last 20 years, India has been the best performing market in the world by far, like way better than the US. It's not close, actually. And you say, but India is a third world country. Yep, it is, by and large. They got some first world parts, but yeah, it's got its challenges. But their stock market is the best performing market in the world over 23 years. And it's because, right, they have good demographics, they have great rule of law, they have some really smart entrepreneurs, and they have some really robust companies. But they also have high rates. They also have a young population, and young populations tend to have higher inflation, which demands higher rates. Old demographics, Europe, Japan, US, ultimately China, have the opposite. You need lower rates. And Chinese rates just hit a new low, not because they are trying to stimulate, I mean, they're trying to stimulate the economy, but the rates hit because people are looking at the demographic wave that's coming. Now, I think the thing they're missing is that'll actually be a really good thing for China, believe it or not, because they have a massive baby boom that no one talks about. They're all they talk about is the baby bust, which is real. But as the really old population starts to decline, this 300 million cohort of millennials, they have 5 times as many millennials as the United States, is going to rise. And that's going to be very interesting because they won't have the same type of entitlement problem that we do. Whereas as me and all my brethren and sisters start to retire, your generation is going to have to pay us because of Social Security, Medicare, Medicaid, which nobody wants to cut, even though life expectancies are longer and all this good stuff. But I think that's an interesting dynamic that nobody wants to talk about. But bottom line is rates will likely get cut, probably not anytime soon, although it is an election year. So watch out for gerrymandering as we come into the election, because right now the Dems look like they're going to get wiped out, but they're going to do everything, including trying to get Taylor Swift to endorse the president, which I think would be hilarious, but we'll see.
It's all programmed, says
right.
some. Hey, final question. This one's just for fun. Based on your Bitcoin forecast at the end of 2024 or cycle top, where does that put Ethereum? What's your forecast at cycle top or
this
end of
one's
year?
hard for me because I can make the case that, Bitcoin won the race to be money, right? It is the perfect money. It's digital gold. And I know there are people on the East side that say, no, we're money too. I'm like, not really. And I don't think you can be money using proof of stake, but that's just my own personal opinion. So I do think that Ethereum has the potential to be the world computer, right? This giant networked computer, which everyone else builds stuff on. Now you got to fix gas fees, and they're working on that. And So I probably have no reason to go against what has existed for a long time, which is the ratio between Bitcoin and Ethereum. You know, it used to be almost exactly 10 to 1. So if Bitcoin was 20,000, Ethereum would be 1,000. No, it was 10 to 1, 20,000 and 2,000. And that changed a little bit in the last cycle. So now we're, whatever, 52 over 28. What is that? Should be able to do that in my head, but I can't. That's 1.8. So that's a little bit higher. So in that regard, I could see a bigger rally in Ethereum than Bitcoin. And that's kind of what you would expect in the pump part, in the final meteoric parabolic move. Ethereum has historically outperformed Bitcoin, and it probably should again. So let's say Bitcoin gets to 150, like I think it will. And let's say we don't go all the way back to 10 to 1, but we go to, we're at 1.8 now. Let's say we get down to 1.5. It's probably not aggressive enough, but let's say it's 1.5. So that's 10,000. I think there are a lot of people that have that number in their brain, and a lot of people say, well, that's not enough. Like, fine. Let's say it gets all the way back to 10 to 1. Then that'd be 15,000. So comfortably somewhere between 10 and 15. Here's the funny thing. I'm sure you've done the test. It's like a cognition, not a cognition, it's the Kahneman-Tversky thing, where they ask you within 99.999% accuracy, give me the range for X. And they give you a bunch of stuff. The length of the Nile River, the distance to the moon. And the right answer for every question is 0 and infinity. Because then you would be 99.999% right. But the human can't do that. So we'll say, oh, the Nile River, it's between 180 miles and 1,400 miles. And the answer is like 5,000 miles, some crazy thing. Like, why would you do that? Just say 0 and infinity, but the human can't do that. So I should just say 0 and infinity, but I'll say somewhere between 10 and 15, depending on how aggressive we get on that ratio.
Mark, super realistic, super thought out. I appreciate that. Links for all your stuff down below in the video description. The audience already is going down there right now and following you if they haven't already. But just final thoughts for the Altcoin Daily audience.
Look, I always enjoy these conversations. Thanks for having me back. I love the fact that you guys have built this great following, and the number of impressions that you get from these things is quite astonishing to me. So I feel honored to be invited back and to continue the conversations. And if people do have questions, I'm easy to find on Twitter. I'm there, as my wife would say, too much. But if you do have questions, shoot them to me, and we'll talk again.